Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire.
Yeah, but we all think you're crazy.
You don't fight this. No way.
The markets are freaking out, and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
There we go. Hold on. Let's get that. Didn't have the volume on, guys. Oh, I didn't get the music ready. Hold on. There we go. All right, guys. Well, it is Monday. It's another week. We're going to get some big economic news and everything. We got some PMIs coming up here today. Let's see here. At the bottom of the hour, though, nothing. The S&P and ISM manufacturing PMIs will be today. So that's always, or at least as of late, has been a pretty significant mover. So let's go and look at the charts and see where we're at over the weekend. So the treasuries had a little bit of an up move on Friday, some short covering, I believe. But on this morning, they are back down under pressure again. There are concerns again. Oops. Whoa. What happened there? Okay, that's kind of weird. Okay. Sorry about that. Anyways, I'm a little bit concerned about if the treasuries move too much either way, there could be some chaos. I'm a little bit more concerned about them going, reversing to the upside because it just seems like everybody's short. But if they keep going, there's some basis traders could get screwed up from it going down, selling too much too. So, all right, S&P 500 kind of struggling around here. It looks like they kind of pulled something out on Friday, but they have given that up in the overnight session today. Oil also coming back off of its highs. And one of the news stories that I saw this morning was that India is uncomfortable with current oil prices. So that's kind of interesting. And gold just, oh my gosh, gold just absolutely savaged last week. And silver as well. Look at how far silver came down. They moved way further than the interest rates, by the way. Interest rates were up, so that really kind of reinforces that the move in the interest rates was probably short covered. And then you got Kappa also giving up some of its gains today. Dollar looking really strong, up above 106, and Bitcoin taking another little spike. It looks like there is another round of buying here. I don't know if it's Michael Saylor or what, but they are just doubling and quadrupling down. That could be a problem if we really do get some economic weakness here, but I'm actually thinking that it might not be so bad. After reading reports and everything, yeah, the consumer is going to be weaker. Yes, financial conditions are higher or are tighter, but I think that the economy can probably withstand what we've got. But again, like if things turn south, it will do so like really quickly. So kind of got to keep all of that in mind. All right, so let's take a quick commercial break here and then go through Twitter, see what we got. It looks like we do not have any news. Oh, no, we got Canadian manufacturing PMI. So let's wait for that 1 minute. Apple blames bug for iPhone 15 overheating, plans to issue software update. I think they're lying. But a software update probably would fix it. Big story in the political world right now is that the shutdown was averted, and Gates is talking about removing McCarthy. Another 45 days. That's correct. So, what's going on here is that, okay. There again, we keep talking about this, and I feel like everybody is ignoring me. I feel like I'm being ignored on this issue because my audience is mostly Republican, and the schism is in the Republican Party. You've got to understand, not everybody in the Republican Party is on board with completely abandoning Ukraine. Okay. It appears from polling that the majority, slight majority of Republicans are opposed to funding Ukraine, but it's only a slight majority. That's still a significant portion. And then when you look at independents and Democrats, they're overwhelmingly in support of continuing funding for Ukraine. So you got this portion of the GOP that would be willing to shut down the government just over the Ukraine funding, quite literally. And then there's other ones that are saying like, well, we should get this priority, we should get this priority. But basically what it was coming down to was they were going to shut the government down over that there needed to be Ukraine funding or not. Or the Republicans were going to say, we're not going to sign something unless it does not. What is the best way to say this? They would refuse to sign anything that had Ukraine funding in it. I'll put it that way. Okay. By the way, McCarthy, the guy in charge, is one of those people that think it's important to fund Ukraine. Okay. So what did he do? He said, well, okay, fine. You know, I can just team up with Democrats to get this passed instead. I actually think strategy-wise is probably the right call. Because again, if you start a government shutdown over not wanting to fund Ukraine, that's just not going to play well on the American public. It's just not going to play well. I mean, usually Republicans look bad in a shutdown regardless of how it happens. But I think that they would look particularly bad if the key issue was Ukraine war, which the majority of Americans support, right? So I think he did the right thing. But then, total craziness. The way that it went down, and now they're going to try and remove him from the speakership. I don't think that they have enough to do it. But you may get back into one of these things where, like, there's not enough members to vote yes for him, and if the Democrats don't help him out, then you could just be, like, without speaker for a while again. Could be weird. But we'll see what happens. I'm not opposed to supporting Ukraine. It seems to me that a lot of attention is going for them versus towards our problems, like the hurricane destruction in Florida and the Maui fire, for example. You're totally right. I think that they did fund those things, though, didn't they? I mean, the bigger issue here, you got to realize. Actually, can I go to a commercial break for a second? Gather my thoughts here. Let's do that. Let's do that. Give a minute. while we're waiting for people to come back, I'm going to try and pull up a chart here. But it's not loading. There we go. Okay. So what is his name? Mr. Milton Friedman. He has something he says that I think is so important for people to realize. Because it's basically, it's a way to kind of get around all of the facades and ways that Congress and the system have kind of developed over time to fool the public, essentially. Because basically what will happen is they'll go and say, well, you're not heavily taxed because, like, here's your tax rate and stuff, right? But they find many different ways to kind of get around this. One way is that they have a bunch of different taxes. And so it's hard for you to sort out how much you're actually being taxed until you go and you do the taxes, right? But then another thing that they do is they run deficits. So they run deficits, and that results in inflation from the currency and so forth. They have to print money, and there's all this crazy stuff that they have to do because they run a deficit. So really, what you got to do is you have to look at how much is the government spending relative to the size of the economy, because you're paying for it one way or another. Even if they aren't directly taxing it out of you, you're paying for it in inflation and so forth, right? So if you look at this chart right here, this is federal net outlays as a percent of gross domestic product. And you can see that we've never been more taxed than we are now, with the exception of the World War II era. Right? And then, and that's even when you look over in this area. Right? So, yeah, we're getting taxed big time. We're getting taxed big time. So they run these deficits. And the point was, well, yeah, are all of these things going to be paid for and everything? Well, they are. They're just paid for with deficit, right? And that kind of takes them a little bit of time. So I don't think that it's necessarily... I guess what I'm trying to point out here is that this perception that certain priorities don't get as much attention is kind of a little bit of cloak and dagger kind of stuff. Like it's kind of done in a way to make you feel like that. Like the GOP kind of wants it to play out in a certain way so that we all feel like that we're not taking care of our own well enough, so that we'll vote for Republicans, right? But in the end, it does all get funded, right? But then you look at the Democrat side, it's like, you're not allowed to reduce spending for anything. Like the Democrat Party, man, at this point is just straight up gaslighting the public, right? They're saying that, like, what you think is going on isn't what's going on, and trying to get you to doubt your perceptions, essentially. Because we all know what's been going on with the economy. The public is very much aware of the current economic situation, and then they come out with this Bidenomics push, which, by the way, the headline today from Axios was that Democrats are questioning it and that they think that it was a unforced error from the president, which, yeah, that's what we said last week when it came into it, right? Yeah. If we're going to piss money into boosting the Ukrainian economy, we can afford to spend infinity $1 trillion. Yeah, totally. Totally we can, right? But when are they ever going to reduce spending on something else? Like the number of things that they spend on, it's so crazy. And we literally can't afford to not spend on even one thing. Like, it's just nuts. Why isn't it the case that we can cut discretionary spending and still fund the Ukraine thing? I don't understand why that's not. I really think that the GOP is like really underestimating the negative geopolitical impact of stopping funding for Ukraine and allowing Russia to take over that country, man. Most positive economic times was during the Clinton era with a surplus. I'm not sure that I would call it the most positive economic times. I mean, we did have some pretty strong growth during that time. But I think that the growth, so when we're talking about the federal budget and all of that sort of stuff, that's a different thing than growth, right? Major reason why we grew so strong during the Clinton years was because of the technological innovations that we had at the time and not anything that Congress was doing. But we did have a surplus at the time, and that was largely the reflection of the deals that Bill Clinton made with the Republicans to cut spending. It'd affect the politicians' global energy strategies, but no. That's not why I'm concerned about it, man. So if you come out and you say, oh yeah, you can totally go and start invading Eastern Bloc countries, and we'll fight against it for a little while, but ultimately we are too divided and just don't have the, what was the word? Dedication. We're just not dedicated enough to keep the funding up and stop you from doing your thing. Okay. Then that is essentially carte blanche for Russia to go and do whatever it wants. And again, people are in denial about what Putin is actually all about. You need to realize that Putin is a far-right ideologue. When I say far-right, I mean culturally, it's like a reverence for the past and things like that. He's not a communist per se, but he does yearn for the prestige of the communist years, and he kind of wants to reunite the USSR. And if he knew that nobody was going to do anything about it, he would plow over every single one of those Eastern Bloc countries. Absolutely no question about it. And then you're going to have, it's basically like the Cold War all over again, right? You're giving China carte blanche to invade Taiwan, okay? And then who knows what kind of crazy shit they start in South America, because you realize that these countries are starting to mess around in, of course, China's already all over in Africa, but they're starting to do stuff in Brazil and these other countries. You don't think that it's eventually going to come to your doorstep, man. It's coming. It would absolutely affect us, and especially for our friends in Europe. It would be a huge problem for our friends in Europe. This idea that you're just going to let the dictatorial regimes take over everything that they want, and we're just going to sit here and be fine and nothing bad is going to happen, is just, the history has proven that foolish multiple times now. You just cannot. There are certain kinds of part of the reason we have so much peace in the world today is because everybody's freaking scared out of their wits to do anything, because they know that there are certain aggressions that the United States and the world at large won't allow. And if all of a sudden we start allowing those things by Russia and China, then everybody's going to start doing them. So you've got to stop them, my opinion. Now, I don't know if there's a whole lot more progress to be made in that war. Might just be like the lines just stay where they are now. It's an investment boondoggle. It's not an investment boondoggle. Why can't Ukraine have their land and resources? Come on, man. Again, I think you're being naive about what Putin actually wants. You think that this is just the typical power, oh, you know, everybody wants more land and that's going to make them richer. No, absolutely not. This war has objectively harmed the oh my gosh, did my my headphones just kind of went. This war has actively harmed the Russian economy. Okay, it has not been economically beneficial for Russia. And even if they win, it's not economically beneficial for them. Okay, it has nothing to do with the resources, man. It's ideological almost completely. Go back and look at this shit that he says and the stuff that like the other hardliners in Russia say. Mm-hmm. That's not like a real argument, right? So what I said is, it's ideological. Here is the evidence that it's ideological. And what you're saying is, it must be this because it's always this. But you have absolutely no direct evidence that it is. And I already gave you an example of why it's not, because it's not actually helping them or giving them more resources. Nor would it in the long run. Well, I do think we blew up the pipeline. But so interestingly enough, the guy, there was a story last Thursday, I think it was, where the guy that originally released that story says why they did it now. And the reason that they did it was that they were concerned that Germany would just get used to it and decide to take it sitting, you know. They'd say, oh, well, this is absolutely terrible, but we need the oil. So they just blew up the pipeline, so it wasn't a factor anymore. Oh, everybody pays for it, man. I mean, like right now, it's inflation. Totally. We all pay for it. Yes, we pay for it. Worth it. Well, we do have the capacity to pay for it. But we're paying for it in a very underhanded way, right? So it's really not fair to the American public to say, oh, well, we're only actually taking this much from you. And then you pay for it in inflation instead. But that's what they do. And the inflation hammers the middle class and lower classes the most, sure. I feel like we're losing the plot here, guys. You cannot allow Russia to win, man. At the very least, you cannot allow them to come in unopposed. Like if it had turned into, okay, they're going to attack Ukraine and we had like never given them any kind of assistance beforehand, and we just kind of sat back and didn't give them any assistance after it started and just let Russia take the country over, I'm telling you, the world would not be a better place, okay? And the United States would not be more prosperous. The United States' prosperity is primarily a function of the prominent place that it plays in world politics as kind of like the enforcer and the primary currency. If you give other countries carte blanche to start taking on all of the ideological and other resource kind of political battles that they've always wanted to do since World War II, you're going to have chaos, and it's going to hurt our position in our trade. It is. This idea that the Ukraine war is like bad for us economically is just, I think it shows a complete misunderstanding of what the current geopolitical battlefield looks like. If we go into this world where you can take over Ukraine, you can attack Taiwan, or wherever else it is that you want to go, that hurts the U.S. negotiating position and U.S. trade in unbelievable way. It's just like you're talking about the basis of the entire economy for the last 80 years. You're just going to throw it in the trash. Would be the cheapest to study on real-time market profile? Well, so I don't think that most of the stuff that you're going to see out there about market profile and footprint is really going to help you, Eddie. So what I would do, I have a video series on order flow, and you go and watch that video, the whole thing. There's like 5 videos in there now, I think, particularly the last 2 videos about the inelastic markets and the stylized behaviors of markets. I think that when you're first coming into this field, it might seem really intimidating and kind of arrogant, I guess you could say. Part of that is intentional because we only want people getting involved in the community if they're serious. But also because a lot of what we have to do is kind of dissuade people of folk stories, essentially, that certain strategies work and so on and so forth. Once you understand the true nature of the markets, it's kind of a humbling thing. You kind of realize that the market is not some equation that you can solve. It's a living, breathing thing that adjusts. It evolves as we evolve, and it adjusts to the strategies that we're using. And so, there's just sometimes we have limited areas where we can see what's going to happen and take advantage of it. But overall, we're always still at the market's mercy. And basically what that all ends up being is that a lot of these things that are taught out there, like these footprint charts and stuff, it's not that a footprint chart is useless. It's just that what most people do is they try and teach you setups and patterns in those footprint charts, and those don't lead to profitability. At least not long term. Seems like the treasuries are on the downside foot still today. Wasn't like a huge move that we got down here from 19 to 17, but it did move down. And it was about 5,000 contracts net, so. Now, on the other thing you said is that Ukraine isn't going to win. So if the definition of Ukraine winning is that they claw back all of the territory that Russia has taken from them, at this point it seems unlikely to me. But it's not over yet, so. Yeah, see, there you go. You know what, Eddie? Wait until 7:30 because I have a video coming out today that is just for you. Crimea. Well, it sounds like that they want to go after Crimea, but oh man, I can't wait to see your reaction. You'd be the perfect test case for this video, Eddie. I'm warning you right now. It's probably not what you're gonna want to hear. Dude, guys, I am so nervous about this video. Yeah, no, it'll be out. You'll be able to view it in 30 minutes. Like 7:30 Mountain Time. So in 35 minutes. I'm a little nervous, one, because these guys have kind of been known as to harass people. No, I did not put ICT in the title. I don't mention. I probably missed something somewhere in the video that shows that it was ICT. Coward. Well, I really think that so there's two things. Number one is you don't want to get involved in the YouTube thing with like bullying and harassment, right? So I really think that avoiding talking about people personally in that kind of a manner is the best policy. But number two is that it was not about people, right? This is about the market, what the market does. And so I think that it's more beneficial to you guys to keep it focused on the market. So there's all this stuff that I could have talked about in the video about like I found court documents for when they were involved in student loan fraud. Basically he was telling people, oh, you don't have enough money to trade? Well, just go and get a student loan. Like you can sign up for classes over here and everything, but then they never went to the classes and they just traded the money instead of using it for school. So it was student loan fraud, and they got prosecuted for it, and you know, they were successfully prosecuted for it, right? I don't talk about that at all. I mention it briefly so that people can go and search for it if they want, but I don't talk about it at all. It's all about the backtest. Now, I don't know. I also didn't go into the code. I show you the code. The code will be downloadable, of course, but I didn't really go deep into the code. One of the things that I think will happen is there will be people that will try and go and download the backtest and everything and will start to question the backtest. Because what happens is, it's actually really quite funny, is that they have this setup, right? And it seems like this really clean, easy to describe setup and everything. But when you actually put all of their qualifications into it, the way that it plays out sometimes does not look like what they want. Because there's all these qualifiers. It's like there's certain events that they want to have happen, but like how much time can go on between those events? And like they're looking for a gap, what do they call it? A fair value gap. But like, what happens if the fair value gap is all the way up here? What happens when there's multiple fair value gaps? Those sorts of things. How big does the fair value gap have to be? And you could, of course, be more strict. You could say, well, I don't like the way that this particular setup looked, so I'm going to add an additional condition to ensure that this one doesn't count. Well, then that's just less samples. Just less samples. So, but I would have liked to have gone more into the code, to kind of justify why I made the decisions that I did and everything. But there just wasn't enough time. Like, I felt like the video was already too long, so I didn't go into that. But yeah, I think that there's going to be some people that are going to be very upset. I think there's going to be people that are going to try and negotiate, they're going to try and look for every possible reason to nitpick on me why I'm wrong. And so I'm super nervous about how it's going to go. But I think I've got a pretty good title and thumbnail, and the video is really, really interesting. I think you guys are already familiar with what's going to be in it. I think the video is going to I think it's going to attract attention. And that's the other reason why, and that's probably the big thing that makes me nervous, is that like this could be something that attracts a lot of traffic and attention onto the channel, attention that we aren't used to dealing with, and changes things a little bit for us, and we're gonna have to deal with that. So yeah, I'm really nervous about the video, but I have a video that's basically debunking smart money concepts coming out later. I also do try to explain why some people might feel like that their results are different. Go into that as well. Anyways, I feel like I had gotten so deep into the Ukraine thing, but I had kind of forgotten the point, right? Because I think that my main point there was, I don't think Republicans are reading the room. I don't think that Matt Gaetz is reading the room. Like, he's coming in there like, we have to stop Ukraine funding, and I'm like, dude, nobody's with you. Like, you could come in and you could pick almost anything else and probably get it, or probably get something. But because you insist on making the Ukraine war the big issue, you'll get nothing. You'll get nothing. Because for most people on the other side, it is not a negotiable thing. It would be not a negotiable thing from a moral standpoint, because you're going to make a moral argument that we can't abandon our allies, and that what's going on there is awful, and that we need to stop it and do something, right? From that standpoint. But then a lot of them are going to go with the argument that it's that military strength and so forth that is a big portion of our prosperity. They're not going to allow Ukraine funding to lapse. It's just not going to happen. This is not a practical, like, if your goal is to stop funding the Ukraine war, you're probably not going to get it. In fact, I dare say that if you got a president in there, I don't know if Donald Trump would be one that would do that. But let's just say that that's what he was saying he was going to do, and he followed through with it. I think even then it would maybe not defund the Ukraine war. Like, it's going to happen. And I think if you're reading the room, you can see, hey, there are some places here where we can do something. But we're going to get nothing. No, it's not. That at the end of the day, everybody does what works for them. No, here's what happens. Is you go and you do what you think works for you, and then after a long enough time, the market comes and bats you down and destroys your account. And then you are too embarrassed to say anything, so you don't tell all of the people that you told on the internet that it was a great strategy. You don't tell them that you blew out your account, and you either quit and go away, or you lie to yourself and say it still works, and you just constantly chase after that one period where it seemed like it was working. But you never go any, like seriously, if it was working, where are all the millionaires? Right? This is sort of saying the market is not an equation you can solve, because it changes. Or rather, when you go in and you solve the equation, you find out that it doesn't give you the answer that you wanted. Because you think that there's this solution to it, and that it's just gonna solve all your problems, and then the market's easy from that moment on, right? But that's not what it is at all. So once you solve it, once you figure out what's going on, you realize that like it's always going to be crazy hard, and it just only gets harder as the market reacts to what you do. As you trade the strategy, that changes the performance of the strategy. Trading the strategy changes the performance of the strategy. So what works for you now is probably not going to work for you in the future. Right. Yeah, I get what you're trying to say. I'm just saying it's illogical. It does what you're saying is not line up with the way that the market actually works, right? In any other venture in life, that would be a great argument to kind of like diffuse the tension or the argument, to say, well, you think that this way is profitable and you think this way is profitable, but everybody will just trade the way that works best for them, right? Here's why it doesn't work that way. Markets have fat tails. So you can think that you're doing really well, and the reality is you just haven't been trading it long enough to find out what happens. And that's how these things spread, is that most people, they think that, having a few weeks or a few months of profitability is like, okay, guys, I've figured it out. I've made it now. Then you go and you tell everybody. And then a year from now, when you blow out, you don't tell anybody about that. But that's like what always happens. That's why you don't see these tons of these traders out there that are just making money hands over fists. It's only like 1 to 5% of traders that they're actually profitable from it, and a good portion of those are maybe just lucky. Well, so if you I've seen some tweets from that guy recently, basically admitting that he's made more money from the YouTube and the teaching than he ever has from trading. Absolutely. He's that channel has probably made $1 million just in advertising. Excuse me. That guy has probably made a lot of money just in advertising revenue, and it could be upwards of, well, it's definitely going to be in the hundreds of thousands, if not $1 million. Like, it's a crazy amount. I mean, I don't know. I'm betting that some of the subscribers may be fake, because if you go and you look at his Social Blade stats, there's like this one point at which he gets like a ton of subscribers, and then that's kind of when the channel starts taking off. But, it's hundreds of thousands of subscribers. My brain is slow because I totally let that slip. But you know what's the other crazy thing? Okay. When the student loan fraud thing happened, it was like, he was like 50. He was in his 50s. Like, the guy is old. Did you download? I think I did. I think I did. 4019. I might have downloaded it and not installed it. Oh, you're right. I didn't install it. Thank you for reminding me about that. Since the market's not really doing anything at the moment, we might as well just install it right now. We didn't do it on Friday when it came out because I was kind of worried something might happen, but I'm not too concerned about the market at the moment. But what are the problems that you've had, Octavius? It's gonna make me shut down Ninja Trader, isn't it? Really, it's like in his 50s or 60s now. It's like, what? You'd never tell from hearing his voice, right? Which makes you think, oh, maybe that's why you don't see his face very often. I get it. You look old. When I'm watching my video, I'm like, I'm getting old. like you can see the age on my face from the beginning, from now until like my first videos. You know, that's what's going to happen, though, isn't it? They're going to say, well, people do what works for them, even though, like, I basically just proved that the strategy doesn't work and that any success that it ever had was probably due to the strategy getting popular and not there actually being an actual stylized behavior of markets that they're taking advantage of. Well, we'll see. Okay, well. Oh, that's cool. Yeah, you can use the cross instrument, all right. That's all you got to do is it finds it and you just select it, huh? Well, that's cool. Doing that reset the DOM, but that's okay. Oh, they're not available on demo? You know what? It actually doesn't surprise me. Yeah, what you would want to do is like open up an account, you know, start paying the data fee, and then you should get all of the data. If you set up your data correctly. But yeah, if the demo data doesn't give you, I think the demo doesn't give you the 5-year either, so. Only one way to solve that one, unfortunately. Or quite frankly, you know, if you don't have enough to start an account, because look, futures is not really a very good way to build wealth. You kind of already have to have a pretty decent wad of cash to trade, and like excess capital that's constantly flowing in to be able to really be able to trade long enough to make it. But you know, if you can't afford that and you still want to learn, you can always just rewatch the streams and just, you know, on the video say, oh, okay, I would do this here and do this here as you're watching the data live. That was always kind of the idea, was so that you could go back and watch the flow and practice on it. I guess one of the most important things for you to practice is just putting the orders in and canceling them and stuff, which is not something that you can't do unless you have the account, but... Hey, Jiwi, where you been this morning? Oh, okay. Newsom has filled Feinstein's empty seat with somebody I've never heard of before. LaFonza. Wait, her name is LaFonza? Oh, Fonza. LaFonza Butler. Of course, he promised that it would be a black woman, didn't he? Yep. Oh, no trading today just came in. Well, thank you for... I feel so privileged that you would, you know, make sure that we saw that you were here. Because I would start to be like, Monday, Chewy wasn't here, and that must have meant that he made a mistake or something and doesn't want to trade anymore. It's usually how it starts. You know what? I don't know if it bothers me. You know, like, I think that for a congressional representative, that there should be enough competent people from every kind of, like, demographic that you can think of that could be an effective congressperson. The question is just, are you... Because I think, you know, a lot of these, we have had some problems, let's say, with what people call diversity hires. But I don't think that the problem is because they're like a diversity hire per se. I think that it has more to do with like the process. Is like they say, okay, so we need somebody of this minority to fill this position. But then how do you find the minority that is actually like, you know, competent to do that particular job? And I don't think that they go and they look at, oh, here's all of the skills that they would need to have and that sort of a stuff. No, I think that what happens is they start to talk to their buddies and their buddies say, well, I like this person and I like this person. So it's nepotism. It basically, when you for a political position, go in and want to make a diversity hire, it ends up being a nepotistic hire. You hire somebody from your network, and that doesn't actually select somebody that actually has the best skills for the job. But that also kind of comes back to, we kind of fill political positions out of nepotism all around anyways, which is why we have so many, you know, which is why there are so many incompetent people in government of all races. I'd rather see all that stuff be merit-based and let the chips fall where they may. Yeah, I would think so. But at the same time, like, what is merit for Congress? You know what I mean? See, the thing is that usually, well, so like for president, let's just say for president, for example, right? There is a process that you go through to become president, okay? And that process determines largely what kind of president that you get. So, by the way, if you don't like the kind of candidates that you tend to get, maybe you need to change that process a little bit to favor candidates that have different attributes, right? So the way that it works right now, you kind of have to like build a coalition up, and then there's like all of these hoops that you have to jump through. You have to get a certain amount of fundraising. You have to defeat your opponent at the debates. You have to do the right things on the campaign trail, right? I mean, those are the things about our system that pick who the president is. Okay, it's not a perfect system. I think it's probably pretty darn good, but it's not the perfect system. Right. And that's going to determine who you get. And what I'm pointing out is that the systems that we have in place that get people into positions in the United States very often don't select for meritocracy. Right. Because you would think that being energy secretary, for instance, would be like somebody that's worked in the industry and has had success. And that success is what propels them to that position. But that's not actually what ends up happening. What ends up happening is the president has all of these positions to fill, and he has these bureaucrats that kind of he can just place anywhere that he wants. And, they made the right decision. They agreed to support him or whatever. So he gives them a staff position. And this is how you end up with Pete Buttigieg as transportation secretary, right? That's the process that we actually use. It doesn't result in meritocracy. And to the point at which I think that a lot of people, a lot of young people have realized that the system is not as meritocratic as we're told. It's because of the systems that propel people to positions. For instance, if you're at your job, right, should your advancement in the job be based on your performance? Well, I think most people would say yes. But is it actually based on your performance? Well, it's kind of based on your performance. But at the end of the day, there's still a person that has complete discretionary authority to decide whatever they want. Right? So it's not actually, it's kind of a facade of meritocracy. And then on top of all of that, like this happens a lot in the computer world. So you have somebody, they're a great programmer, they do a good job, they seem super sharp. Okay, let's make them a manager then. Well, just because they're a good programmer doesn't mean that they'll be a good manager, right? Shouldn't selecting somebody for management be based on tasks that they've been doing that would predict for success in that field? But we don't often give people tasks like that. Most places don't. Actually, the places that are smart, like you go to the banks and they actually do that. They teach everybody the management skills and they give everybody the opportunity to run projects and so forth and see how well you do with it. And then those are the ones that they decide to promote to managers. Meritocracy can always be determined through trial and error. I mean, I guess you can put somebody in the position and see how well they do, and then if they don't do very well, then you get rid of them, right? But see, I think that my main thing here, like in life, is to build up the society, leave it better than we found it, so that it's better for the next generation of people that come along. How do we do that? And my answer is that the number one thing that we can do to help build society is to understand the existing systems first. Once we understand where the existing systems are, we can then suggest incremental change, not radical change, because radical change tends not to work. So I'm still conservative. But changes, yes, we can tweak things around, see how the system reacts to them, and we can build systems with incentives that push towards the outcomes that we want. So one of the outcomes that we want is meritocracy, right? So you have to think about through our systems, whether it is in government or at your job, as to what is the system that we're actually using to promote people, and does it actually support, does it actually lead to the best people for the job? And I think that you'll find that in many instances it doesn't. Maybe because we just don't understand what makes somebody good for that job anyways, right? Like one of the things is, like here in the market is a great example of where this generally tends to work, right? But there's problems with this as well. But here in the market, right, you either make money or you lose money, and most people lose money, and the few people that are successful, they gain more money. And so the market, I would say, ends up being a meritocracy. Basically, the people that stay in the market are the ones that make money. It's directly your performance. It's 100% your performance, because if you don't perform, then you lose money, right? And what that can lead to is people can be successful through extremely unconventional means. You're going to come in and you can find something about the market that just seems really dumb to everybody else and nobody else looks at, and you can come in and be successful with it, right? Well, how do you do that in a regular job, right? Like you could be a manager, a leader with extremely unconventional leading tactics and right? But ultimately, a lot of it would be your perception among other people and not your actual performance, right? So management ends up being a difficult problem to solve for because we don't actually know what makes a good manager. And we're basically being asked to look at people and determine whether they would be a good manager, because we don't really have a system that really would proves out that somebody is a good manager or not. Because so much of it is just based on other people's impressions, what other people think of what's going on. Instead of like the market, where it's a hard rule. You either made money or you didn't, right? Management is a special problem. It's a serious skill that must be taught through university level programs and years of practical learning, yet it's often a product of a 3-month course. Yeah, this is true. It's totally true. That's why in tech, I tell you, man, when you find a really good manager in tech, hang on to them. Because it's hard to find somebody in tech. Like in particular, I found lots of managers that I get along with, and they run a good team and everything, but like somebody that understands what's going on and is able to make the strategic decisions for the team, because that ultimately they always end up doing that. Those are hard to find. Same with your product owners, product managers, whatever you call them. That's also, especially if you're in a really technical field, finding somebody that has the right can actually do that well. It's hard to find. It's rare. Military usually does a good job of producing managers. Maybe. I don't know. I can't get into that, because when it comes to the military, I just can't get past how awful we treat the people in our military right now. Like, you freaking, you're a base level private in the army. Like, they literally don't pay you enough to live and support a family. Like, you have to get on, they're just like, get on food stamps. It's just absolutely abhorrent. I feel when it comes down to like what should the government do and not do, and I think that the government has expanded their scope of like what they should be doing way too far, because I think that the military is like one of the few things that is like explicitly defined in the Constitution that our federal tax dollars should be spent on, right? But then what happens is we spend all of that money on equipment and contractors and allow them to just take like obscene amounts of money, like way more than they actually should be. And then we pay the actual people that are like dedicating their lives to being in the military and protecting us. And you know, that's like a huge sacrifice for their family, and we pay them shit. It's awful. It's just, so it's one of those things that it just gets me going. It just gets me going because I think that the military should be one of those places that's like, well, it's a really tough job. It's not for everybody, but if you're willing to do it, you'll do real well. And they take good care of you. You're taken care of for life. They pay you a ton. And you know, the military is one place where you can go to kind of get a leg up. But it's not. It's the bottom of the barrel. You want to know why military recruitment is down so much, right? It's because they treat their service members like crap. It's not just the U.S. military, it's everywhere I am. It is. But you know what else is something that I learned about the military when I was a missionary and served in the military base that was very shocking to me. Because I remember there was this kid. He'd come over. They were newly married, and he was a member and everything. So he was trying to do everything right, but you know, he was not a very bright kid, and he came from a poor family. So you know, the military was like the way for him to do the thing. And they were married, but yeah, they had to live in a trailer out in the middle of nowhere and be on food stamps. It was insane, and they couldn't afford it even then. It was like absolutely insane. And then I would go over to the house of like the military brass that are like in charge of everything. He's got this huge sprawling house on a hill that overlooks the whole city, and like it's like the nicest house in town. Holy crap. There is a class system in the military, and it's wild. Because you think, oh, okay, so like is it like you enlist in the military and you're a private, and then as you do good throughout your career, you'll get promoted and you get to higher and higher rank, and that's how it works, right? Well, yes, but that doesn't mean that you're going to become a general, because the people that become generals are people that go through the officer training program from the very beginning, and they went to college to do that. That's the other thing is that these are people that are college educated, right? So those privates never become that. So there is a class system in the military. And the requirements and the experience for people that are officers is completely different from your regular enlisted person. Not that I'm no ex. That's basically the extent of my knowledge on the military, but that's the few things that I know to be like, Okay, here's the system that we have. There's a few things about this system that I have. I wish I knew enough to recommend how to change it, but is that actually going to lead to the outcomes that we want? Seems to me like no. Seems to me like what we do is we encourage contractors to give us the highest estimate that they can get away with, and we just pay it. And well, I tell you what, man. Super tight session for the treasuries. Okay, so Our video should be out now. Here we go. I picked this title because the AI recommended it. So I don't know. Busted. SMC. Smart money concepts exposed. Wow. Already 5 minutes and already 3 views, guys. Share. Copy. And I'll post it for you guys here in chat. You can open that up and start watching it if you want. And I promise to not say anything too important for the next 15 minutes so you can watch the video now. Very nice video as expected. Thank you. And by the way, guys, the thing that will help us out the most is after you watch the video, leave a comment. We're going to need it this time because you know these guys are going to come out of the woodwork and start, you know, leaving lots of comments. Just inevitable. It's just inevitable. Just poking around the internet here. Wow, okay. According to Statistica, there's 360,000 enlisted personnel in the Army, and paying them $70,000 a year would be around $26 billion. The 2024 Army budget is $842 billion. So it wouldn't even be that big of an increase in the budget. I mean, when you're looking at $842 billion, you can't tell me that there's not $50 billion in there that is like waste and excess. Like, right? We need to look at our systems. We need to understand our systems and find incremental change that we can make to try and improve them. By the way, I'm just noticing that I never had the lights on. Oh, that looks so much better. A little bit of color in there makes the screen so much better. I'm just poking around to see if there's anything interesting, like news-wise, that could kind of shift the discussion this week, I guess, but I don't think so. Oh, we do have in 5 minutes the ISM, don't we? Yes. So I was like, I knew there was missing something. Should tweet about our video too. Dumba. I should also go and find that one guy that. Let's see here. See if I can find him. Mm-hmm. Okay. Well, they're back down to the lows there. Oh, I didn't even hear. Do I not have my news clock turned on? Let's see here. ISM S&P Manufacturing PMI final 49.8 versus 48.9. So I guess that's too strong. I don't know. Oh, did we lose our music? Yeah. Okay. Oh, I didn't catch that, but it was a good that ZB was pushing the highs before that news came in. Hmm. It's got, what, 8 minutes still? So there's a story for us to read here in the meantime. On Sunday, the Trump administration's pandemic-era student loan pause officially ended, resettling more than 28 million borrowers with the consequences of their own actions. Granted, colleges virtually assured 18-year-old six-figure salaries amid ridiculous tuition hikes before Bidenomics and the Ukraine war resulted in scorching inflation. Despite pleadings from advocates, the Biden administration has reactivated payment requirements, The Hill reports. It's a sad day for student loan borrowers and for the country that student loans have to come back on, especially with the threat of a looming government shutdown potentially on the same day. It's just wild, said the president and founder of Student Debt Crisis Center, Natalia Abrams, apparently unaware that nobody forced anyone to take on. Man, Zero Hedge has no opinion here, huh? According to the July survey by Life and My Finances, half of borrowers don't make enough to afford their student loan payments, while 22% had a plan on how they would make ends meet once payments resume. Some borrowers are going on a student debt strike and refusing to make payments as a way to show their discontent with the system. Yeah, I wonder how many people will actually follow through on that. Meanwhile, President Biden, who made a key pledge of his 2020 campaign, has released an on-ramp repayment plan that allows borrowers to miss their monthly payments for the next year with fewer consequences than before. The Department of Education will not put borrowers in delinquent status if they miss payments, garnish their wages, or send them to debt collectors. But borrowers will still see interest accrue on their loans, and their credit score could be affected, despite the department saying they won't report the missed payments to credit card companies. There could be situations where potentially because you're not making your payments, the value of your loan is increasing because it's collecting interest, so you still owe more money. The credit bureau takes that into account, and maybe your credit score gets dinged a little bit, said the Lending Tree senior economist and student loan repayment expert Jacob Channel. Maybe I'm going to say it's Chanel, okay? As we've noted for years, student loans were an albatross around the neck of young borrowers even before the pandemic pause, delaying home ownership and throwing retirement saving plans into disarray. In 2019, nearly half of student loan borrowers delayed a home purchase due to educational debt, according to real estate site Cleaver. In typical pre-COVID times, when people are paying their student loans, they're not buying their children's medication, they're not able to save for a house or retirement. We know from polling borrowers for so many years that they were using their COVID pandemic money to pay for basic needs, and so the worry is that they won't be able to. In June, the Biden administration took the flatly unconstitutional step of forgiving at least $10,000 in student debt for all 45 million borrowers. However, it was predictably struck down by the Supreme Court in June. The reason only 28 million borrowers will be affected by the resumption, only half of them, is because the rest are either paused because the borrowers are in school, in default, or waiting in the hopes that their debt will be discharged. Oh. That said, the administration was able to create a new income-driven repayment program known as SAVE, which rolls out in two phases. The first phase coming later this year, the income exemption is raised from 150% to 225% above federal poverty guidelines, which grants an individual borrower making up to $32,000 a year a zero monthly payment on their student loans. The same zero payment scales to a family of four making under $67,000. Next year, monthly payments will be cut in half, moving from 10% of discretionary income to 5%. The Safe Line is a lifeline if you're able to get on a zero payment, and we have worked with some borrowers, especially older borrowers, on Social Security to get on that plan, said Abrams. But the folks that we're seeing it harm or not be helpful is our folks that may have seen an increase in their income during the pandemic, and when they go to apply, the people who were on a previous IDR plan, they realize they have to pay a much higher payment. According to the Republicans, none of this addresses the root of the problem. This conversation distracts us from the core problem, which is making student loan money too easy, which causes tuition to rise and does not address what is needed, which is that colleges need tough love to end their addiction to tuition, according to Adam Kessel, a visiting fellow in the Heritage Foundation Center for Education Policy. Republicans have brought forth a solution that holds colleges accountable for rising costs and empowers students and families to make the best decisions on their college careers and beyond. But if Congress fails to act, students will continue to drown in debt without a path to success, says Senator Bill Cassidy, ranking member of the Health, Education, Labor, and Pensions Committee. And then there's the economy. As we noted last week, personal consumption collapsed in the last GDP revision, and in fact, printing at 0.8, down 80% from 3.8% in quarter one. It was a downright disaster. As shown in the chart below, personal consumption was expected to print unchanged from the first revision to quarter two GDP at 1.7, and instead it came in at less than half at 0.8%, a 9 sigma miss to expectations. Of course, when it comes to the U.S. economy, which is 70% spending driven, all that matters is consumer spending. And the sudden collapse there confirms what we have been saying. The U.S. is about to careen into an economic contraction once the various factors that will slam quarter four GDP come into play, including the resumption of student loan payments, federal government shutdown, and reduced auto production from the ongoing UAW strike. Hey, at least the government averted a shutdown, so at least we've got that going for us. So that was a good story because it gave me a lot of numbers there and kind of the details on the laws that people would use to determine, what they should do. And I didn't realize that it was about 45 million students and only about half that are resuming payments. So good information there. So in about a minute here, we're going to get the ISM manufacturing PMI. Expectation 47.9 with the previous reading of 47.6. So I would expect it to still be below 50. So still in contraction. With student loan repayments resuming, would you think the equities market would experience significant outflows because of it? Not necessarily. I think that there would be a little bit less inflows, and it probably will affect GDP a little bit. But I don't know if that's enough to really, screw things up. Okay, so gonna keep an eye on this. We could get some big volatility here. Whoa. Interesting. Okay, actual 49. They were expecting 47.9. We got 49. It's still below 50, but it was higher than expected. But prices paid 43.8 versus an expected 49. So I don't know if this is actually as... So there was a knee-jerk reaction lower. I actually think that the prices paid maybe actually makes this a slight buy. But it is still geez, the economy seems to be doing better than anticipated. So I don't know if I get a clear trade off of that. Felt like that, in the recent past, we've had a lot of really good news trades. And then in the last 2 or 3 weeks, we every time that we have the economic news, there's just nothing in it for us, Well, I suppose that we are higher than before the news, but so far I'm not really seeing a clear direction with the market orders. It kind of looks like the liquidity is doing pretty okay. We're already back to 2,000 contracts on there. Oh yeah, so we were talking about the student loan things. So we'd have to think about, like, would it be outflows? I don't think that people are going to sell their stocks to pay back their student loans, right? But it is like an inflow that I think has been a major factor behind people buying, that won't be there. So it will decrease inflows, right? Less market buying, essentially. And it's anticipated that it will be like 0.5% off of GDP or something like that. Like 0.5% off of the GDP. So that's not trivial. But the Goldman economists seem to think that the economy is strong enough that it weathers all of those things. As I think, like, we were reading that zero hedge story, and they're saying all these bad things are happening, and consumer spending was already pretty weak, so it's, everything's going to collapse. But the economists have been saying, yeah, well, we're in for a little bit of weakness, but it looks like it doesn't appear to be anything that the economy can't handle. I'm not so sure about that. Oh, Jamie Dimon is on Bloomberg TV at the moment. I would, though, expect that the market, at the very least, the market is not going to be like as much of a bull market as it was. It'll be a little bit more of a sideways market, I think. It'll kind of be up to the options and everything else as to how volatile that ends up being. Maybe I need to, like, crack my back here. Be back. Actually, let's run a commercial here real quick. YouTube loves that. All right. Not bad. Not quite as good as our volume profile video, but it's up there. Forgot about that one. I just post the link in here for you guys again in case you want to watch our video about smart money concepts. Make sure to go watch the video and leave a comment. What is cacao talk? When I click share in a post, YouTube pops up and it says, okay, do you want to embed? Post it on WhatsApp, Facebook, Twitter, email, or cacao talk? What's that? VK. Okay, there are so many of these that I've never heard of before. My old. I guess I'm old now. Sigh. I don't know. I kind of am wondering if that news ends up being a nothing burger. I would say the flows overall still seem to be tilted to the downside, though. T-bill futures have arrived, says the CME Group. 13-week T-bill futures are now available for trading, bringing the efficiencies of futures, global accessibility, and new spread trading opportunities to the short end of the curve. Access T-bill futures on CME Direct and leave third-party vendors. Access T-bill futures on CME Direct and leading third-party vendors today. Would you like to know more? It actually says that. Want to know more? Click these resources: contract specs, synthetic price history, market maker discovery. Oh, directory. Market maker directory. What are the contract specs? Price quotation 100 minus R, where R equals the discount rate of the 13-week U.S. Treasury bill auction. Contract unit is $2,500 times the contract grade IMM index. And the minimum price fluctuation, all contract months with 1 month or less until the last day of trading, is 6.25. All other contract months are 12.50. Oh, so it's smaller. It's smaller than CN. Interesting. And it is TBF. I wonder if I come over here. And I download instruments. And I say CME and CBOT and update and download. It's a little bit of a downtrend. They're trying to pull out a blue candle, but they're not quite making it. Still selling. Actually, I'd say about 10,000 contracts worth of selling since this news. Fed to launch an instant. Wait, really? I want to follow the Federal Reserve on Instagram. You're not just joking, are you? Smaller, but might trade like the 5-year. I found a account that looks like the Federal Reserve, but it says no posts yet. Oh, yes, I have. I see it here. Let's read the press release. The Federal Reserve Board launches an Instagram and Threads account with the aim of increasing the accessibility and availability of board news and educational content. The Federal Reserve Board on Monday launched its Instagram and Threads accounts with the aim of increasing the accessibility and availability of board news and educational content. The first post on Instagram will include a brief welcome video from Chairman Jerome Powell. Instagram posts generally include photos, videos, frequently asked questions, and answers, economic education content, and more. Posts on Threads will include press releases, speeches, testimony reports, and all other content that is regularly posted on the board's X account, formerly known as Twitter. I love it. Nobody's ever going to call it X. It's always going to be the platform formerly known as Twitter, right? The board's website, thefederalreserve.gov, will remain its primary channel of communication. Selected announcements will be shared on Instagram and Threads only after they are first posted on the website. With the launch of Instagram and Threads, the board now shares information on 7 platforms, including X, Facebook, YouTube, Flickr, and LinkedIn. For media inquiries, please email media@frb.gov or call 202-452-2955. Wow, they actually put a real number there. And the treasuries are moderating a little bit, but it still looks tilted to the downside. I'm going to reset it right there. Okay, well, when I click on the Instagram from here, now leaving, continue. Aha, that other one that I found was not the official thing. Here, let's watch their video. Wait, I need to log in, I think. Log in with Facebook. Cool. All right.
America's central bank working to promote a healthy economy and a strong financial system. That mission starts with you. October is National Economic Education Month, and throughout the month and beyond, we'll be posting here with information, links to events, and other resources about how Fed decisions affect you, your family, and your community.
Oh, cool. Cool. Wait, let's do that again.
I'm Jay Powell. I'm the chair of the Federal Reserve, and I want you to know that the Federal Reserve is now on Instagram and Threads. The Fed is America's central bank working to promote a healthy economy and a strong financial system.
Okay, J Powell, let me help you. Look, you got to get the arms like here, like this, right? You're gonna be like, right? Because when your hands are just down to your sides like a cardboard, it looks kind of dumb.
That mission starts with you. October is National Economic Education Month, and throughout the month and beyond, we'll be posting here with information, links to events, and other resources about how Fed decisions affect you, your family, and your community.
Cool. Well, I'm following him now, I guess. Follow! I don't really open up Instagram. I don't really follow people on Instagram anymore. I used to be like, constantly going around trying to add people and stuff. I just don't care anymore. Okay. So now let's try opening up this new instrument. Do you think that it will let us see it? Okay, what was it again? They were calling it TBF. TBF. Maybe we can find it in Rhythmic. Let's see here. No, that's not. How about I open an order book? How do I get the little, maybe on the chart? Say lots of volume in the 30-year? The 30-year seems to be selling particularly hard, doesn't it? Ah, there we go. That's what I was trying to make show up. You say 2 years unchanged from the numbers? Well, they're kind of reversing at the moment, though. This is kind of looking a little bit like, again, yeah, like the dollar ends up mattering more than anything else, right? Okay. PBF search. 13-week U.S. Treasury bills. So how come over here in Jigsaw? Well, I can see it here in... okay. Let's open the order book again. Okay. So there's about 1, 2, 3, 4, 5, 6 ticks spread. It's times 7. So it's like $32. That's a pretty wide spread. That means that there's some opportunity for us to come in and bring the spread down if we had some other data to trade against. Actually. But the liquidity that's out there right now by the robots isn't too bad. I think that as that accumulates, this might become a thick instrument. So that's something we might want to keep an eye on for another time. Okay. Well, so they did build out, I'm going to clear this. They did build out a decent pullback, and the treasury got almost all the way back up, and then they sold the 30-year again. So like we're getting the steepening again, like hardcore steepening, in fact. I guess the economy being strong and inflation coming back down is very much in line with like the soft landing narrative, isn't it? Kind of a key decision point, I guess. We'll see if they get dragged a little bit lower here. The flows are definitely still short. One tick higher. Well, I'd say things are pretty quiet now. They are on a little bit of an upturn. Kind of feel like 4.7 would be a bit much, don't you? Let's do a poll. Let's do a poll. Engage with your audience. Start a poll. Where will 10-year rates be at end of year? Above 4.645, below 4.645. I'll add the third one at 4.645. Oh yes, we need percent. Start poll. Oh, good morning, Mason. How are you doing? Oh wow, one of you was anxious to vote on that poll. You clicked right away. That was Octavius. Okay. Do you think higher, huh? One of my favorite things to do on social media is when people are like asking, trying to figure out how to market. They're like, so you found what works? And I'm like, yeah, just know what's going to happen. It's my favorite. The last fictional character you've seen wants to murder you. How screwed are you? Well, the last fictional character I think I've seen was Tinky Winky. So I don't know what would... Does Tinky Winky have powers that would be a problem for me to... if he was trying to murder me? I don't know a whole lot about this. He has a bag. I'm thinking that I would probably be okay, but it would just be really disturbing. Billionaire CEO says remote workers just need a nice little recession to return to the office. I think that some of them are never coming back, dude. Any quote status symbol that you can just buy with a credit card. Let me tell you something, folks. Status symbols don't work. You'll think that I'm going to buy the nice thing, and then people are going to see the nice thing, and then they're going to treat me differently. Doesn't work. Because the person that has the money, the prestige, the status, doesn't need to show it. Although I am awfully impressed if you have a Rolex. That's not easy to get. I think it's also like the social mediaification of it all. You know? There are some things that, like, when you can see everything that's going on in the entire world, it's not impressive anymore, right? Oh, you have to be, to get the nice Porsche, you have to be a regular customer already? I think if I was going to buy a nice car, maybe it would be a Porsche, but... I saved up for 3 years to buy my iMac. That was a big deal to me, and it felt like an accomplishment. Yes, back then it would have been. At least to buy a new Rolex, you have to get on a list. But I like my Blue Eyes White Dragon credit card. It makes me feel like, wait, that exists? What? Credit card skin. Okay. I think that you put your credit card inside of it or something. $10. That's a luxury item in Bud. For sure. Kind of cool. It's kind of cool. %, win rate, 2-to-1 risk reward. Oh yeah. If you have enough samples. Risking 200 to make 400. That's great. But how many samples do you have? Well, let's do the math. Let's do the math, shall we? Wait, do I have it over here? Yes. Come on, G Inc. Get with the program. I have to kill it here. There we go. So it should be 1 over 1 plus 1.5, right? One divided by 2.5 plus 0.4. So you actually probably need a little bit more than that. We got this right. I wrote it in this book, right? Yeah, 1 over r plus 1. How many samples do you have? Well, looks like the treasuries have come back down to the lower end of this range again. It's quite a zigzag today. Not really my market, but if we're going to play the range, I think you buy here, right? You buy at 15 and hope it goes back to 18. Oh, you know, that reminds me that I had a trade that was like long last week, but I puked it before the end of the session. Lost like $500 or something on it. They're right there. Did this 30-year make a new low? It did. Did make a new low. Well, we took the pull that was 645, right? Yeah. 1.645. So we're almost 20 above that now. And it does look like the 30 year is getting dragged down. Pretty consistent declines here. Okay, not new lows yet, but there was a pretty big puke there. That's probably enough to try and make it tick. Like from 12, I'll do it. 12.5 to 12. Printed didn't clear me. Well, only 8 votes, but it seems like the vast majority of you all believe that rates will be higher by the end of the year. Nope. I might have to just wait that one out, but it looks like I'm going to get more adverse excursion than favorable excursion. Let's bring this down to justify it. They're liking 13 there. It's kind of looking like maybe a bit of a liquidity hole, though. Having a hard time getting more than 100 contracts. 30 years still pushing, man. Look at the 30 year. Chugging along there. New low here in a second. There you go. Jeez. Clicky click click. Does not look good for the long end of the curve right now, and the equity market is starting to maybe take notice. Clarence Thomas recuses himself from Supreme Court case concerning January 6th. Fed's Bowman expects it to be appropriate to raise rates further. I don't know, man. Like, I was thinking they're probably not going to raise rates in November or December, but it's kind of starting to look likely, isn't it? Oh, big bid at 12.5. Interesting. Come on. You don't really want to reverse here on me, do you? Really? I feel like I haven't been doing very good on these tiny ones lately, have I? I'm getting that sleepiness come over me a little bit right now, which is a little odd. Thought I had a good night's rest. I don't know what my problem is. But I'm like wanting to fuzz out and like just go sleep. Okay, well that big bid at 12.5 ain't there anymore and nothing is traded, so... isn't there anymore. I don't know why I'm talking like that. There's that moment when DeSantis went from it's a territorial dispute to Russia is a gas station. Consultants did that and he's never recovered from it. I think that if DeSantis came out and had more of a, you know, I really am not happy about what's going on and I don't want to spend more money than we have to, but we shouldn't just abandon Ukraine. I really think that if he had taken that position, that he'd be doing better right now. But super hard to really know for sure, huh? One order, but they still could not get the flow to come in at 12. Okay. Ordered pulled there. Still not enough to get what we want at 12 though, huh? They're fighting me. It's so close, but I'm not sure it's going to do it before we leave here today. See my eyes wanting to go like cross-eyed. Since I'm losing focus, like it just doesn't want to focus. And my leg is bouncing super hard trying to keep me awake. I don't know why I'm like this, but I mean, this is something that will happen to me in the afternoon, not in the morning when I'm trading, so. I don't need more than that on the offer to get me filled, probably. Okay, flipped briefly for a second and a few orders came through. The new California senator is registered to vote in Maryland? What? Oh my gosh. She recently moved or something? That's just so dumb. Pick somebody that basically doesn't actually live there. Okay, now we got filled. Woo. That gives me a little bit of breathing room for maybe 11.5. Or just let it ride. Let it ride. You're winning, good. Just let it ride. Let it ride. If you're down, add more. Add more. I don't think that if I had the limit order there at 11.5, they would get filled before the end of the session anyways, so. Actually, I will leave it there because I don't want to babysit it all day. I'm a little bit skeptical of the rise in rates here today, though. I kind of feel that the lower prices suggests inflation is cooling off. And I kind of think that the flows are maybe not related to that news. And so as such, the possibilities that other flows come in long at some point, I think, are pretty high. Maybe not today, but all right, well, I think that's all I got time for today, guys. What should we put in the title for today? Rates rise above 4.6% after PMIs. Was that, or we're at 4.65? Let's say out 4.65. And year rates. All right, guys. Well, now I feel a little bit more awake. All right. I will see you tomorrow. In the meantime, stay excellent, team. Hey, and make sure, and I'll post it here one more time. Make sure you go and check out our video. Actually, you know what I can do is I can say, redirect Oh, can I not do that? I guess I can't. That sucks. Okay, well, the link is up in the chat a little bit, so go check out the video. Catch you tomorrow. Stay excellent, team.